Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. A very interesting close on Friday as the Australian dollar plummeted against the US dollar as the Greenback staged a broad market recovery. Viewing the economic calendar this week, Monday appears to be slightly quieter, but the market will be looking keen for the quarterly CPI figures this Tuesday. The quarter-on-quarter CPI for 2018 is expected to read around 0.5%. Previous was 0.6%, while the RBA trimmed mean CPI is also casted at 5.5%. Looking at the market though, as you can see from the bearish outside range day, along with the rejection from the 60-day simple moving average at 78.18, the market plummeted and now is very close to challenging the 76.30-35 level, which was the low around March. What can be ascertained is the fact that some profit taking may emerge from here. Although the MACD is supporting a bearish signal, along with the stochastic, the RSI is a little bit oversold, so we could see a slight round of demand. Nevertheless, a challenge to the downside will eventually be expected, and beneath 76.30 does give us a target of 75 cents, so do keep that in mind. Any advances on the day sees resistance around 76.95 to 05. Finally, the euro tumbled on Friday as the US dollar gained momentum and actually took on the challenge and broke above 90. And also for the euro, posted a low of 122.49, right above the crucial level at 121.80 to 122 the figure. Overall, the market does look further to the downside for the euro. As you can see here, it is getting slightly to the bearish case of eventually taking the downside challenge. This week, we have the announcement from the ECB on its monetary policy decision, along with the press conference from President Mario Draghi. The European Central Bank rate statement should be a bit of a key level, and if slightly on the dovish side, could see the market post further weakness. Therefore, this would actually give some upside pressure for the dollar index. Now, above 90.40 is the broad downtrend, and a break there would give further scope for the euro and also for the US dollar to rally. This would see a market take on the challenge of 121.80. A break beneath there exposes a region of 118. Dollar yen slowly crawling over this 107.70 resistance. Not quite broken, but enough to support further gains into today. I believe the market will eventually challenge higher and look towards a region of 108.55 to 109.15, with the support now seen at 107.35. Well, the pound plummets further on Friday and crushes the support of 140.35. This is the fourth consecutive bearish day. Now, the market all started off after the Bank of England posted his, Mark Carney posted his dovish comments, trying to move away from the fact that they're not looking at a hike in May. Also interesting to see Michael Saunders, who is also quite a hawk, made some dovish comments and said that the UK rates problems needed to be more over time to something more to neutral, but nevertheless trying to sort of give us the same similar tune that we had in November when the Bank of England didn't want to tighten rates, but surprisingly they did go 25 basis points. I think the market's just trying to steer away. The fact is they will go and just put in a little bit of calmness into the markets, but nevertheless the dovish comments has sent the pound through that level of 140.38 and exposing the region 140.35 to expose the region of 138. I do expect to see further weakness with the immediate target seen at 139.60 with a cap of 140.55 and reassess from there. Well, the gold over the weekend, more to the fact, Friday plummeted around $14 and now looks towards a support level of 30. I do expect to see we could see a little bit of demand here, but 24.26 is more to the level and treat 30 as minor. Resistance comes in at 38. And to round off with oil, well, it would seem that Trump has turned to oil now to take the Twitters after he said that OPEC is artificially keeping prices high, but the OPEC ministers were quickly to respond to Trump's tweet, according to news reports, with the Saudi energy minister saying there is no such a thing as artificial prices. Nevertheless, the market did drop to 67.44, and I do believe that this could actually fuel a bit more downside pressure. I think we've seen a high now from 70.72 as a cap, and looking back towards $66 a barrel as a potential target. Well, that rounds off for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day and a new start to the week.